All right, testing, 1, 2, 3, testing, 1, 2, 3. Looks like there's a microphone on this setup. Good morning, everybody. Welcome to Trade Non-Farm Payrolls Live 176. That's pretty cool, huh? 176 months in a row. Thank you, FX Street, for being wonderful partners throughout the, 15 years? So, cool, very cool. So welcome to the FX Street YouTube community. How many subscribers? Is it 27,000 or something like that? It's pretty amazing. So I've been working with FX Street for almost 20 years, which I think is really cool, super cool. Now this setup that I'm using to broadcast onto YouTube is an old setup, and I think every time I change the camera, I'm going to have to manually add the microphone over and over and over again. Very nice, especially since I have more than one microphone. So this is going to be interesting for the next couple of minutes. But I'll tell you what, if you bear with me as we get, I think like the next thing I need to do is sort of broadcast the charts because it's broadcasting the wrong thing. So I'm going to have to tweak around with the settings, but be patient, okay? So the rest of the morning, we can go through, we can talk about some of the macro setup going on as in regards to non-farm payrolls and COVID and all that kind of stuff. And then eventually I'll set you up for on how to do the high volatility event-driven strategy for the news release, because remember, it's just news, it's not fundamentals. After the news release, then we got to get ready for the stock market open at 9:30, and then I'll do my best to answer your questions. We can talk about currency pairs, we can talk about commodities, we can talk about currencies and bonds, we can talk about real estate if you want. We can talk about trader psychology, trading strategies, scalping, spot, swing, trade. I've been doing this for a very long time, and I know a few things, and I'm here and I'm willing to share. So ask questions, get involved, and all that kind of stuff. So let me try to speed this up. I'm going to say the disclaimer, then I'm going to show you the disclaimer in a moment of silence because I won't have a microphone. And then we'll come back. And I think I'm going to have to add a microphone. Then I think I'm going to have to add the charts, but just bear with me. And then we'll get it all set up and we're golden, okay? By the way, you're looking beautiful this morning. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Inputs. All right, now do you have sound? Now do you have sound for me? Yeah, I think you do. Okay, so you got sound for me, but these charts are not what we need. So why is that not working? All right, well, let's try to do this. Add video capture device, window capture maybe. No, let's do video capture device. Add source. No, that ain't gonna work. No, cancel. Add window capture, add source, add source. Which one? Streamlabs. No. Nope. That didn't work either. Oh, that should work. Done. All right, so it's kind of a weird setting, but we'll use it. We'll go with it. I think I can also add the chat. Let's try that. Let me capture this just for fun. Copy, add, window capture, add, new window capture, add, and then window will be chat. Right, the colors don't really match. Added the wrong one. Remove. Yes. window, add, new, add. Now it won't let me add the chat. All right, well, we'll just leave it there for now. It ain't pretty. Let me get the chat back from myself. Wait, that's not it. I guess that's what happened. It deleted it. That's why I couldn't pull it. Hang on, guys. This typically works. All right. Let's get rid of that. I might actually be able to add this. So now I can see your chat, which is helpful, right? Don't you think? I think it's very helpful that I can see your chat. What I'm trying to do is add it to the stream, so I'm going to do it one more time. Window capture, add source, add a new source, and it should, yep, chat. It's the wrong color, but it's something. It's because I have it on boss mode. All right, so anyways, there's something there. There's something. It's a little dirty, but we'll go with it. All right, so now I can see it. Sound bad? Is that right? Does it sound really bad? Oh, you know what it is? It's using the wrong microphone. Hang on. That's what it is. Okay, I can fix that too. Hang on. So that's key row. I can put it on siren. Okay, is that better? Maybe it wasn't bad, but this was probably better. Yeah. Okay. Thank you, everyone, for your patience. You know, patience is required to be a successful trader. I can tell you that, faux show. So thank you for doing that. It's not a sound boost. I switched microphones. All right. So thank you for your patience. What should we do? Should we quickly go around the world? We can do that. Let's just start with indices and see where we stand. Yen is weak. Yay! Oh, you know what it's doing? Look at this. I know what's going on here. I know. Hang on. I know why there's this. This is the way it is. Let me add one more thing. Aha. Why don't we do it this way? Why don't we? Well, we will. Well, we should. We're gonna. For sure. All right. A little better. Hey. All right. Japanese yen weak, which is awesome. Dollar weak, which is awesome. Kiwi weak. Pound, yeah, it makes sense. Aussie down, shoot, and euro up. So you can see like a lot of this is just euro. So it's really a kind of muddied waters, if you ask me, because euro's strong simply because dollar and yen are weak. So right now it's a bit mixed bag because Aussie being down and Kiwi down is indicative of risk off, at least in the APAC. And then, you know, yen and dollar are weak, but that tells you the opposite. It tells you risk on. So I have risk off and risk on signals. So that's kind of weirdo. I'm sitting on 2,400 pips. Okay, so not a lot's happened in the last 24 hours. That's cool. That's fine. So what do we got in our face as we go into the end of the week? Well, obviously we got non-farm payrolls. It's a bit mixed bag. Weekly is okay. ADP is iffy. But it just shows you where the jobs are coming from. What's up, Stevie? Whether the jobs are small business or big business, well, big business wouldn't hire so late into the season. If they needed seasonal workers, they already hired them kind of thing. So That kind of makes sense. We also are looking at this as maybe a litmus test towards the second wave of COVID and all that kind of stuff. So I would expect the numbers today to be lower than expected. Hey, Marina. Yeah, USD up. Still moving strong. Well, it's just fundamentals, right? Right? It's only money, right, Marina? So, is non-farm payrolls true? Is it a good sign of the productivity or job creation and job demand for the economy at this moment? Is it a little too far backward looking? Do we need something a little more forward looking? Is the market, meaning the stock market and the currency market and the commodities market, are they really playing the data from, what happened in November, or are they thinking about what's happening in February and March? Like, what is actually moving it, right? Are we that worried that this NFP is that important? Well, here's my 2 bits. Okay, here's my 2 bits. Well, let me ask you. How about that? Let's start with a question. Let me ask you. By the way, my name is Wayne McDonell. I'm with Traders Way. Did I even mention that? Boy, I'm so discombobulated trying to get the platform up. Tradersway.com. Broker, you're a trader. Why don't we fall in love, huh? Tradersway.com. Anybody here like fast execution speed, low spreads, 50% off ECN fees? World-class customer service, tradersway.com. Marina's like, oh, thanks for all your knowledge. Oh, cool. Appreciate that. So, what if non-farm payrolls isn't the biggest thing at the moment? What is the biggest market mover at the moment? What is it? If non-farm payrolls isn't the biggest market mover today, what is the biggest market mover today? Brexit, vaccine, potential stimulus. So I'm going to go with stimulus. Yes. Because it's on the lips right now of politicians. Okay? Now, if you're in the UK, you might say, well, Brexit. If you're in America, you'll say, what's Brexit? And then you'll focus more on American news, right? So there's one difference. But vaccine. No, sorry, a stimulus package, right? It was on the table, it was off the table, and on and off. Then we've gotten through the election, then it was off, and then it was kind of back on. And there's some pressure maybe to get a deal done by the end of the year. Now, it went from like 600 billion to 1.1 and 1.6 trillion. Now it's back to 900 billion. So it's fluctuating around. But there might be more focus at this exact moment, like meaning today, that a deal gets put, like a real deal that has real opportunity gets put on the table soon. Maybe today, probably not today, but they're going to talk a lot about it today. And then maybe by the end of the year, we get something done. Now they have to agree on it. It's got to pass the Senate and the House and all that kind of stuff. And then the president has to sign it. But let's say every single day for the next bit, they're going to talk about getting closer and closer to that. Okay. So if that is what you want, that's good for the economy, right? That's good for these trades. I think we all want one more round of volatility. So what kind of numbers should we pray for today so that is more likely to happen? Do we want a good number, a neutral number, or a bad number? And as many of you have typed into the chat, thank you for that, by the way, you want a very bad number. This is a behavioral finance question. It should be so bad that Congress feels that they must respond by saving the country with fiscal policy. So a very, very bad, disappointing number today will probably rally the stock market. If we get an outrageously good number, like much better than expected, then that's going to dampen enthusiasm by Congress to push out a rescue package. And so therefore it ain't going to get done by the end of the year. So a great number is bad. A horrible number is good. And about expected is neutral. And by neutral, that probably is bad as well. Meaning, not bad like bad makes the stimulus. Meaning, probably more risk off in the sense of, I mean, you should know some of these trades are at their monthly targets already. You should be thinking about getting out today. That's what should be on your mind. Now, if you don't know that, oy vey, right? You're missing something. Oh my God. So right now you should be thinking about getting out of trades. And if it comes out neutral, then you're like, well, there's no real reason for them to go higher because we're not going to get the stimulus package. Maybe we get this Brexit thing. But if it comes out neutral, it's just actually more risk that there's no real reason for it to go higher if it's neutral. It doesn't help. So then you're like, forget it, give me my money. Okay. Alejandro got out yesterday. Cool, I got that. So that's what's in the back of my mind, and I hope that's helpful for me to think out loud with you folks. So let me ask the room here, what currency pair is your number one focus right now? If I only covered one currency pair today, what would it be? What would you want it to be? Euro dollar, pound dollar, euro dollar. I guess that would be pound dollar. Must be in the southern hemisphere, huh? The pair is backwards. It's upside down. Pound dollar, USD Kiwi. Euro ZAR? Sure. You know I don't really like that one, but that's fine. Euro Gold, USD Peso, Cable. USD Kitty CAD. What is the other announcement on employment figures halfway through the month? Well, you have things like JOLTS. You have weekly jobless claims. There's ADP, which is on the Wednesday before non-farm payrolls. There's a few. Kiwi, thank you guys. Gold, okay, yes. In gold, I can do gold, I can do oil, I can do silver, I can do Bitcoin, I can do XRP. Right on, Stevie. Okay, I think I got a pretty good idea. Why don't we start with dollar pairs and we'll just kind of look and see where we are. Here's the Kiwi. Let me get my handy dandy notebook out. Okay, so I'm in at 66 and some change, and we're up here at 70. Here's the thing, the weekly target was here. So that's what was the target for this particular week. And what I might be looking for is one more round. So this indicator here is showing that it's 2 standard deviations from the mean, not based on market, but based on price. And so therefore it just kind of confirms I'm looking for this next week. Oh, you don't see it. Oh, so. All right, how do I remedy that? Because it's broadcasting a window, but it's not broadcasting my screen. Okay. Crapola, man, crapola. All right, so let's try something different. Quit that. All right, so I am looking at for next week then. So we're 2 standard deviations from this mean. Okay. Okay. What else could I use as a dynamic level of support? Which EMA? 21 EMA. Okay, good. Insert, indicator, trend, moving average. 55, no. 21 exponential. Pinky in the brain. Did that go in right? Huh. Exponential 21. Doesn't seem right. All right. Fair enough. Apparently that's right. So then the next one, insert indicators. Now I have to put the one I just took out. How funny. Trend, moving average. We make that one 55. Exponential, we'll make this bluesy. So yeah, so really what I'm looking at is this. Okay. So it's all the same, only the names will change every day. Okay. So that's what I'm stinking. What are you guys stinking? But here it says, I'm not sure about the math. Well, it's based on linear regression. But we could add an extra line above and below that if price reaches it would flatten the gradient. Well, it's the first thing that it's doing is it's calculating an average, what we call a mean. Okay? So you can get the average price of this, the average price of this, the average, and all right. And then over the period, because it starts out as a scatter plot, right? And so if you were given a scatter plot of prices, the second thing you would do is you would try to create some linear equation, right? So in this case, I can't do my drawing tool, but it's, you guys remember this stuff, y equals mx plus b is the math, right? Right? So you're calculating this average in here. And then the second thing is you're trying to create a line, right? Linear analysis. Trying to do the line of the average price, right? So, right, the XY axis, B being the intercept. Okay, the part that we're interested in creating the math of this indicator is saying M is the slope, the change in the line through each data point. Okay, so that is how high or how low does it go for every step forward. So for every, like between this candle and this candle, and then this candle and this candle, right? What is the rise over the run? Rise over the run, rise over the run, rise over the run. And of course, adding that up, it creates a slope. So it might be like this, and then it goes higher, and then it comes lower, and then it goes higher, and then it goes lower, and then it goes higher, lower, higher, lower, and then we get here, and it averages out as you add more and more data points. Okay, so that's what this is, right? Y equals mx plus b. So that's the first step in the math. And then the second step is you have to calculate standard deviation from the mean, right? One standard deviation above the mean, one standard deviation below the mean, two standard deviations above the mean, two standard deviations below the mean. And the standard deviations are, I think the numbers are 86 and 95%. Okay, so when you're up here near two standard deviations from the mean, based on what we've measured in the past, that is, you can consider it like 95% overbought. This is about 90% oversold, right? This is about 90% oversold. This is 95% overbought. This is 86% overbought. And at some point, it's just like relative to what it has been doing over this period, it's much more likely to revert back to the mean because it's two standard deviations from the mean, which is very unusual. So that's what the math is doing. And of course, every new candle changes the slope because the rise over the run, as well as the calculation of the mean, is going to change. Okay? Cool, right? So that's what that's doing. So what I'm doing in that is to say, I want this to go up. Okay, I see that it has been going up, and that in the future, because I think it's going to go up, the proper price to be considered buying this is somewhere between 70.26 and 70.52, which is about now. Which means after NFP comes out, I'm going to look for opportunities to buy. Hey, yeah, Guy, so the programmer did it for MT4, and then he started, whining about MT5, and then disappeared for 2 or 3 weeks. And finally, I pinged him last night. I'm like, hey, dude, are you going to do this or what? He's like, oh, man, sorry. I'm like, is it just shitty work or what? He's like, yeah, it just sucks. I don't want to do it. I'm like, come on, man, please. If I beg you, if I give you money. He's like, let me ask my friend and see if he'll do it. So I don't know. Typical scenario with programmers. He did MT4, but not MT5. Nor is he even willing to do it. Just like, so I basically have to rely on him getting a friend to do it, or I have to start all over, find a new programmer, explain the whole thing over. Just crazy. So anyways, hang tight, buddy. Try to get it done for you guys before Christmas. Bear in mind, I have to spend hundreds and hundreds and hundreds of dollars so I can give away something for free. Right? It takes hours of my time, hundreds and hundreds and hundreds of dollars, and then all of a sudden you're like, to give away something for free. But Well, the thing is, Shug, is it's hundreds and hundreds of files that need to be installed into different folders. And apparently the way an installer works is every time you create the installer, you have to do it over again. Everything, every file, one at a time. Put this template into that folder. Put this template into that folder. Put this EA in that folder. Put this indicator in that folder. And they just don't want to do it. Well, you can't steal my intellectual property, though. Be careful, Shug. Yeah, Mahira, if there's no rise over run, it would be neutral, yes. All right, so anyway, so there's my thought process. That's what I would like, and hopefully I can get that. The ultimate target on this Kiwi dollar is 73.5. 73, yeah, about 73.5. I can't see the number here. If it hits, well, it doesn't predict double top, but it's so far away that's not my game plan. My game plan is it's going to go up at 70.26 or I'm done. Okay. Right. But whatever. We'll see. So that was Kiwi dollar. So let's go all the way back over to pound dollar. So here's the trap I had last week. Let's back out, make sure we know the trend. I'm in at 29.5. We're at 34.5. Okay. It's still slowly climbing. My buy zone for next week is 34.18. Right now, we've already had a test of that. So here's truly my buy zone. We got that test earlier today. And so someone already bought it, and that's done. So that's a great trade that somebody made because that would have been Friday morning open, and they're already done next week. They're already on Monday's trade. Okay? This was beautiful. Okay? So the target for that is... Got to go to a 4-hour. Let me put the conservative targets on here. Conservative target is 136, going to 136.30, so 135.90, or is that right? Yeah, 135.89 is conservative. So we're basically tickling either side of 136 next week. So the logic here was there was the higher high, here was the lower low, roll reversal, kick off the future pivot, 21 EMA, and here's where we're going next week. So someone will show up on Monday going, what's up, fellas? What are we doing with the pound dollar? And we'll probably be 30 pips away from taking profit, where other people are like, what's going on? What's going on? Let's make some money. I'm like, dude, here, why don't you buy this pound yen from me? Give me some profit. Okay, so we're already future riding this. So another way of saying it, to really have it kick in, if you're on Monday, right, you might be late already for what you should be doing next week. Isn't that funny? On Friday morning, you might be late for Monday. You're at 29? Yeah. Who ain't? All right. What time is it? I've got about 15 minutes. So that's the thought process, because I'm always pointing to the future, right? So that's cool. So 34 and a half, and I'm at 29 and a half. Yeah, it's a lot of pips. Yeah, 500 pips on the nose. Look at that. So the same. All right. Euro up, Chuck. In at 17. We're now at 121 and a half. Looks like it's still going well. The problem is we're on the line for getting out. So a lot of these trades are telling me it's over, it's done. Like, what do I mean it? I mean December. Isn't that interesting? It's only the 4th of December and the month may be over. Now, in years past, the month is over like the 15th, the 19th, the 21st. Some years it's all the way to the 31st. But technical analysis is technical analysis. If you're using technical analysis, then you should make decisions by it. If you use it, use it. If you don't make those decisions, then don't use the analysis, right? This tells me that there's a high probability that December is dead already. And the only thing that's going to save this is your bet, because it would be a bet, your bet on stimulus. Because it's true, if stimulus comes out, this will go up, but that doesn't change what the technical analysis does. The technical analysis is suggesting that risk is exponentially increased for bulls. An opportunity, the winds of change. Yeah, the winds of change are blowing. Yeah. December winter nights. Yeah. Everybody, hold hands. Everybody. Yeah. Yeah. Down at Gorky Park. Dream of Wayne and his winds of change. So anyways, this is not likely, but it's highly plausible. Okay? That's what that says. If you say, well, it might go higher, then you're not doing technical analysis properly. That's all I can say. You can make a choice and you say, well, that's the conservative target, Wayne, but for X, Y, and Z, I'm going to go for aggressive. Okay, but you should still have an exit plan. And your exit plan shouldn't be, well, if it drops 200 pips, I'm going to freak out. Well, see, I don't want to do it simply because a lot of people that may have gotten into these trades because of my advice are now waiting for me to tell them what to do. So am I going to get out? I don't really know how to treat it because I don't want you to think that that's the right thing. What I do is what I do. I'm not aware of too many things, but I know what I know, if you know what I mean. So the process of your decision is what's more important. So if you took profit yesterday, I congratulate you. That, right? So no matter what happens, so you took profit on the M4, whatever happens, you're not wrong. You see? If it drops a bajillion pips, then you're definitely right. But if it goes up another bajillion pips, you're not wrong. If you say, look, I got out at a monthly target, you got out at a monthly target. That's that. It's not wrong no matter what happens. Well, it's definitely right if the market crashes because then you got out at the peak. But if you got out a little early on that, you can say, well, it's still resistance. What am I? Right? What am I, a fortune teller here? I didn't know it was going to go up a lot, but I know it was a lot less likely to continue going up. So I locked in pips for my clients, right? Or I cashed out super profitably for my clients, right? So like if I got out of my 6 pissy little trades, right? I have an internal rate of return of more than 400%. Do you think my clients are going to yell at me if I get out 100 pips early? All they see is my IRR of plus 400%. You see? Correct. And I asked you to write that down as well, didn't I? I actually told you to write it down. So if you had done that, you did it well and you did the right thing. And you have to be able to live with not judging yourself by what happens next. Even if you're right, you should say, okay, I did the right thing. Cool. And if it goes higher, you didn't do anything wrong and you need to be, right? You need to be okay with that. You have to be okay that you did what you did because you analyzed the risk and you didn't want to accept any more risk than was already on the table. So you did the right thing. And most people, by the way, do nothing. So the fact you did something is a huge benefit to your psyche. It should be anyways. Well, pips and profit. Yeah, I know what you're saying, but yeah. Okay. All right, I need a 30-second break before NFP starts. We got just a few minutes before they release the numbers. So I'll be right back. Cool. So like I was saying earlier, guys, if you need a good broker, tradersway.com is the opportunity for you. You visit tradersway.com, In the bottom right-hand corner, there's a button to open a demo account. It's a quick form, takes 15 seconds to complete. You'll be in the back office, which is nice and clean and organized. You can download MT4, download MT5. You can have an ECN account, fixed spread account, variable spread account. Play some trades. Get to see fast execution speed, narrow spreads, wide swaps. Give them an opportunity to earn your loyalty and respect. That's the sales pitch. Okay? And they've charged me with the duty of helping their clients be successful and confident and have proper trading habits, like relying on trade plans based on technical and fundamental analysis. I don't go out there and go, rah, 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 sell, 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 trade, 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 go, go, go. No, they actually want their clients to be successful, because ultimately they're the most profitable clients, because they trade and stick around for weeks, months, years, decades. It's just a better client, the one that's successful and happy. So, tradersway.com. If you like that business model makes sense to you, see, it's a symbiotic relationship. If you're successful, they're successful. So they're like, Wayne, can you help? I'm like, hell yeah. So if that business model makes sense to you, give them an opportunity to earn your loyalty and respect. Tradersway.com. Okay, so now we got the news coming out. And remember, I actually want a bad number.
You're listening to Trade the News.
Okay? Most of you wanted euro dollar. Maybe we should let's do a different scan here. Let's do it this way. Stevie, I'm not part of compliance, so check it out. We buy pretty and ugly houses. So Aussie already through a buy zone. Kiwi already below the buy zone. That's really
our data again. The change in non-farm payrolls for the U.S. expected at 460,000 for November. That'd be down from 638,000 in the prior month. Unemployment expected to drop 0.2 to 6.7%. Canada unemployment expected to tick up 0.1 in November to 9.0%. Looking for U.S. and Canada trade data at the bottom of the hour.
Stevie says, would it be in US? I don't know. Contact them, Steve. What am I, tech support?
November non-farm payrolls and unemployment in just a few seconds.
This is Trade the News, by the way. I want this to be like 300.
Trade 63.1 billion. Payrolls 245,000.
245! 245!
Expected unemployment at 6.7.
200,000 less than expected. Woohoo!
5 tenths lower than expected.
Nice.
9% prior.
Here comes the stimulus. Free money, everybody.
460,000.
Free money rally.
Payrolls at 344,000 below 540,000 expectation. Manufacturing payrolls rising 27,000, lower than the 40,000 expected. U.S. trade balance at 63.1 minus 63.1 billion versus minus 64.8 billion expectation. And the labor data participation rate at 61.5%.
Yeah, boy, give me some free money.
Hourly earnings at 4.4% year over year is 0.2 higher than expected. In the U.S., month over month at 0.3% is also 0.2 higher than expected.
Come on, Biden. I need to go on another Florida vacation. Last time they gave me free money, I went to Florida.
Employment 62.1 thousand versus the 20,000.
Yeah, boy! Give me more free money. Free stimulus rally.
Give a bit of a whipsaw on U.S. interest rates briefly, moving into negative territory along the U.S. Treasury curve, but we're now backing up once again, particularly at the long end. The 2-10-year spread remains higher by 1.5 basis points where we were heading into the data.
Yeah. Very cool. Come on, Biden, make me rich. It's funny. We buy pretty and ugly houses. It's funny. I like that. Hey, we buy pretty ugly houses. Do you know anything about FHA 203K? Oh. Do 2160 maybe. Okay, we're at the roll reversal. Okay. Okay. So a 382 predicts a 1618. That just happens to be 121.81. Nothing's really changed for me. Still 2,400 pips. Kick it over here, baby pop. So what we're going to probably need to look for is after the stock market open, I think a lot of people are going to come out, from Congress talking about the potential stimulus. Okay, so the high volatility event-driven trade never panned out. Not even one green candle. So now this is the reset. Let's try to figure out the slope. Remember, y equals mx plus b. It's calculating m right now.
IAEA saying to member states that Iran plans to install 3 more cascades of advanced centrifuges at an underground enrichment plant in Natanz. And report coming from the IAEA, the nuclear watchdog.
All right. So the full Monty here. Some people not on the clue train, it looks like. So they're wondering, what do we do? What do we do? So this is just people, I don't know, agreeing to disagree. Let me check to see if there were revisions. Let me get some data here. Prior NFP revised lower, but just by a bit, from 638 to 610. Not a big deal. Actually, the trade balance data is quite poor. We wanted almost negative 65 billion, and we only got 63 billion. So trade balance was off by about 2 billion. So percentage-wise, it's not bad, but I want the trade balance to widen. So that could be a little bit of what's going on here as well, maybe. Now, Canada, that was really something else, huh? Let's take a look at Kitty Cad. The Canadian job rate fell. Am I reading that right? It fell way down to 8.5. That's crazy. Canada added 62,000 jobs. Yeah, that's pretty amazing. So we'll take a look at our Kitty Cat. That's off the charts. Very nice. Good job, Canada. That's a nice job report. Probably going to be revised. It might just be Canadian math. You're like, good enough, eh? So very nice. Projected target is 126.50. Last month's target was perfect. Last month's trade was perfect, actually. So this is supposed to flow down to 26.50. We're currently staring at it at 28, some change. So yeah, there's some juice left here. We're on S1, of course, but should be okay. Should be able to get through that. Why don't we look at it from next week's trade point of view? So I'm going to go swing trade bearish. And it's saying 27 is the target. Remember, I said 26.50. So to revise that, maybe it hits 27 early and then does a full bore pullback. That'd be interesting. Typically, I'd expect it the other way, pull back and then down, but it might just pull the news down. By Tuesday, we've bottomed out and realize it's not just bottomed out for the week, bottomed out for the month. Because that is, if I calculate this correctly using my super superior math mind, that's also the December M1, as well as next week's are S2. Plus, I just remember it from the last chart I just showed you 30 seconds ago. Technical questions? What do you mean technical questions? With unemployment down and an increase in average hourly earnings, not surprised that there's a... This is all good. Yeah, very nice. Oh, you have to set up a new account. Get a new account number and download MT4 again. The easiest way is to have one MT4 account, one MT5 account, Johnny. That would make it easy for me because I'm like, which one do I do again? Oh, the MT5 is for swing. Okay. MT4. Okay, what is that again? Oh, that's for day trading. All right. But that's what I would do. I would have MT4 and MT5 in that scenario. All right, so what else going on the kitty CAD? Kitty CAD, we want CAD yen up. Candy, CAD yen. So looking at our candy, we're at what you would say is price resistance, but market resistance is up there about 83. 82 and a half, let's say. And we're only at 81. So market forces say up another 150 pips. Price forces tell you got to be careful here at 81. So hopefully the news is enough to get us through. Oops, I didn't want to do that. Okay, hopefully news is enough to get us through. Okay, then expect maybe a Monday pullback. And then Tuesday to Thursday rally. Come on now, how many times do I have to click that? Click, there we go. Okay, and we're done that for the month of December. Any questions? We get there. We're isolating CAD right now. CAD Swiss, you got to be careful. CAD yen. Okay, fine. Let's go back to the dollar just briefly. And yeah, this is just whipsawed out. You guys know the whipsaw song? Has anyone read Market Wizards, the original Market Wizards?
FTA Minister saying we will consider all options with the COVID-19 vaccine, including the impact of having just one.
You guys know? So one of Ed Sequoia.
I'm Ed Sequoia.
Ed Sequoia. Ed Sequoia is one of the original market wizards in Jack Swaggart's books from the 80s. Okay? This is Ed Sequoia, one of the major market wizards. And this is what he does for fun.
In response to numerous requests over the years to reveal the inner workings of my trend trading system, I hereby take great pleasure in presenting its essential elements for your financial edification. Joining me today are several members from the Northern Nevada Bluegrass Association. We gather to play benefits for local area hospitals. If you are currently in a clinic as a recovering marketaholic, or even if you have a mild case of marketitis, this tune might put you on the road to recovery. In any event, pull up a chair.
This is what you do when you're a billionaire.
Lend us an ear. We hope that you enjoy the show. You get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. The trend pays for them all, honey, fair baby. Now what do we do to catch a trend, honey? What do we do to catch a trend, baby? What do we do to catch them all, honey trader, baby mine.
Well, what do we do when we show a loss, honey? What do we do when we show a loss, babe? What do we do when we show a loss? We give that daggone loss a toss, honey, baby mine.
Well, you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, babe. You get a whipping, I'll get a saw. One good trend pays for them all, honey trader, baby mine.
Well, how do we know when a risk is right, honey? How do we know when a risk is right, babe? Well, how do we know when a risk is right? We make a lot of money and we sleep at night, honey, baby mine. So
You get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, babe. You get a whipping, I'll get a saw. One good trend pays for them all, honey trader, baby mine.
well, what do we do when the price breaks through, honey? What do we do when the price breaks through, baby? What do we do when the price breaks through? Our socks are in, so there's nothing to do, honey, baby mine.
You get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, babe. You get a whipping, I'll get a saw. One good trend pays for them all, honey trader, baby mine.
There you go, the Whipsaw song by Ed Sakota, one of the major market wizards in the Market Wizards series by Jack Swigert.
What do you do when the drawdown comes, honey? What do you do when it gets real big, babe? What do we do when it's even bigger? We stick to the plan and pull the trigger, honey trader, baby mine.
You get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, babe. You get a whipping, I'll get a saw. One good trend pays for them all, honey trader, baby mine. Now what do we do with a hot news flash, honey? What do we do with a hot news flash, babe? What do we do with a hot news flash? We stash that flash right in the trash, honey trader, baby mine. So you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, babe. You get a whipping, I'll get a saw. One good trend pays for them all, honey trader, baby mine.
Ed Sakota. There you go. Let your winners. So I can bring up. I've lost the thing. I turned it off. I'll reiterate when that came back. When they did this. Hang on. I'll reiterate the rules. It's funny. YouTube recommended a different version that we just saw.
In any event,
And it didn't have the rules. It's funny, people cut out his rules. How come it wouldn't just bring me what I just asked for? Sorry, YouTube is so stupid sometimes. All right. Whip. Song. Okay, so the rules.
I'm in Dakota.
The rules are ride your winners, cut your losses, manage your risk, use stops, stick to the system, and file the news. Pretty cool, huh? That was posted 2008, but this was up there. This is much older than that. Right on, Joseph. All right, so I'm waiting to see if any of the support holds. Maybe it's a misunderstood number. Oh, no! But you watch. Once the media figures it out, they're going to start talking stimulus. They're going to interview every powerful person in Congress and the Senate about, are we going to get a stimulus? With the jobs being so bad, or how are you going to respond? How are you going to react? Are you going to save America? Are you going to do nothing? And all of a sudden, that's what you're going to talk about. That's going to be the words over and over and over again you're going to hear. And all of a sudden, like, we're imminent to a stimulus. We're imminent to a stimulus. And that's what's going to be trading. I think, if anything, like the way this behaved, this was a great opportunity for profit taking from some. Okay? And remember, this was the conservative, I think the number here was the conservative target for December, wasn't it? Yeah. So, yeah. Bank of International Settlement General Manager Karstens. No way. Is that, do you know if it's the same Karstens that used to run the Bank of Mexico? BIS. Let's look that up. What I want is an overview of the people. Basel Committee, yeah. Sitemap, no. About, probably. By the way, BIS can be described as the central bank for central banks. Did you know there was such a thing? I'm trying to find if Karstens is the same dude. You notice these names? Andrew Bailey. Kuroda. Lagarde. John Williams. It's well-known names. I want to know who. Anyways, I'll have to look it up. So Karstens used to run the Bank of Mexico. He's a big dude. Not interested in Basel on that, though. Board of directors, maybe. Oh, we already did that. So he's not there. Look how they organize all the central bank speeches and stuff for you to read in a nice way. Very cool. Yeah, Mahir, that goes back to, a year ago, they were talking 600B. So this could also be affecting what you see in the marketplace. NFP was great, and then all of a sudden, what? We're only going to get 600 billion? That's nonsense, Even 900 billion was disappointing. If the number was good, there's no way they'd be able to pass something like $1 trillion. But with NFP being bad meaning bad, but bad meaning good. Okay? So what I'm looking for here is evidence of supporting, stabilizing that support. To say this differently, on Monday, so here it is Friday, getting close to the end of day in London, and we're at 121 and some change. 121.33 was the projected, aggressive buy zone 5 days ago. So, yeah, we didn't get the up that we wanted, but, it's not necessarily over either. Oh, my God. Any reason why yen and dollar are both falling in a similar pattern? Are they correlated? Holy smokes, yes. For macroeconomic reasons, they're both funding currencies. Holy smokes. So, Mohammed, you just uncovered something like the basis of all trading in foreign exchange markets globally. Right? You just discovered like the whole reason, right? Yeah. Oh, faux show. Yeah, they're both funding currencies. Oh my gosh, they're super important. And yes, they're highly correlated that way. They're highly correlated with global macroeconomic trends, for sure. All right, so let's go. A couple of you guys asked about some exotics. We could do that. Here's the peso trade. Morena's killing it. Remember, this is actually a follow-on to the last one, which was here, and the previous one, which was here. Okay, here's an easy sell. Get that out of the way. Okay, here's an easy sell. And, oops. And this one's not as easy, but it's definitely doable. You get a whip and I get a saw, baby. Okay. Well, yeah, that is my whole strategy on peso is I only do that one trade. And as I've taught you guys, that's not a technical trade, that's not a fundamental trade. That's simply a flow trade. That's just flow. That's just the flow of money. So back when we were in this zone, I guess late last week, I said $2.6 billion is about to move from the United States to Mexico, and you'd be front running that trade. You know it's going to happen. You don't know exactly when, but you have a pretty good idea. Right? Right? Get what? Read. Boo boop 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 doo. Oh yeah, like it threw down a scalp somewhere in there. Yeah, there was a scalp, but yeah. But my point more is to catch your attention more than anything, right? Okay, I think Raymond said Eurozar, and I'm like, I don't really like Eurozar, and it's true. I don't like it anymore. The fundamentals have changed on it, but I have no problem with USD ZAR. Okay. I wouldn't call this a beautiful trade or anything. Okay. And as you can see, it comes down to 3 weeks ago, there was a decent trade. But even then, so I'm talking about this one here, insert shape, ellipse. Okay, I'm talking about this one. Of course, it didn't do it. Insert, shapes, ellipse. There we go. Okay, I'm talking about that one. That one I set up, the resistance, the roll reversal, the fib level. I drew out the arrow, all before it happened, of course. And then like, is this an okay follow-on? Well, yeah, but we never broke support, so no. And then is this a decent follow-on? Well, yeah, you're forcing it to break support, and it probably will, but is it good? No, not like that one, right? And then this one came back 786, which is, to me, a red flag that we're going to probably double bottom down here, or inverse head and shoulders, which would be off this neckline. And I'm like, this one's not that good, this one's not that good, this one's not that good, but the one I pointed out is good. And even then, it's a little bit late good. Like, right? You're trading after the pullback. I'd rather you be up here, right? Those kinds of things. So it's like, yeah. At least you got the carry, though, right? Yes, correct. It's a remittance flow trade. Yes. Cool. So those are some exotics. Let's do some commodities. Okay. We did get through 45, which was a big target earlier this week. We watched this. I set this up on a 5-minute chart, focusing on moving up to 45 and breaking through 45. Our target, 46.39, and we topped out at exactly that price. Check that out, huh? Isn't that nice? That's the projected top for today. Oh, good, we got it. Now, if you have attended any of my training on how to trade oil, you'll also notice that it's set up TOD as down, not up. And that you're getting paid for yesterday's trade is what is really happening. So yesterday's trade, TOD says up, so chow, you take it. And then TOD today says exit and short, which you could do. Or just exit. Right? TOD long in here. TOD long, TOD short. Calv says, hey, would you get into January trades before Christmas? No, not really. I don't think so. You could, but no, I don't think so. No need for that because it hasn't happened yet. See, like, you're front running based on technical analysis. There's no technical analysis to support my hypotheses. You won't get the technical analysis until you know I'm right. And then you're like, son of a gun, he was totally right. But I'm not using a chart for that. You see that? So right now, if that's my theory, I'm the only one on the planet that knows it. So if I'm right, it'll happen, and then technical analysis will confirm it, and then other people will do it because they can't do it until they've seen it because they don't know fundamentals, they don't know seasonality, all they know is technical, so they won't do it until they see it, and I've already done it. But I won't make my money until they see what I've done and then join me. You see? So I wouldn't throw it out there. I mean, you can do whatever you want, but it's a bit of a gamble. Okay? It's a bit of a gamble. Like, it feels to me like, I bet you this is going to fall. I don't really like that, right? I like to sit there ready, willing, and able, and then see my trigger, then take the shot and all that kind of stuff. But I wouldn't throw down a bunch of money and then all of a sudden, boom, stimulus comes out and we have another massive rally. And I'm the idiot selling into it at the end of the year and throwing away 40% of my annual profit on one bad bet. Well, I don't bet. That's the thing, right? So yeah, I wouldn't front run what nobody sees. Like the vast majority of the market does not see this coming, right? So the worst thing you can do is throw it down and people just run you over. And you're like, there's a cliff! There's a cliff! They're like, dude, I can't see you. You're in the way. And they just run you over. And then they're like, holy crap, there's a cliff. Boom, Thelma and Louise, right? So you don't want to bet they're going to stop. They can't see it. And they're not going to respect what they can't see. But once it happens, now you'll have their attention. Can I look at gold? Sure. Yeah, well, Mohammed, what's moving gold lately? Mohammed says NFP came out and there was no real move on gold. Okay, so what does move gold? What's making all of this happen right now? There's two aspects of the analysis, of course. There's this move here and then this move here. What created those moves? Mo Ro Shah? That'd be my nickname. Where are you? Mo Ro Shah! Right? Mohammed? And if you don't know, type in a question mark. Well, it wouldn't be dollar decline because in this case, what you're telling me is dollar actually increased in value. So it wouldn't be that. Financial institute, no. This is directly central banks. Okay? Central banks down in here in response to COVID and the more important, not COVID, but the shutdown, lockdown of their economies. Okay? Think about, for example, when India went in lockdown. India economy lockdown. Let's see if they give us a date. March 2020. Okay? So we are literally talking about this period right here. Okay. I had to look it up. I want to make sure. Okay. According to Google, India's lockdown happened right in here. Okay. Complete shutdown. Okay. So Indians had to move to cash. Imagine now you can't leave your apartment to go to work and all that kind of stuff because the entire economy shut down. So people needed cash, quite literally cash. You need cash in a time like this. Okay? So what happened was Indians needed to bring cash home from foreign investments. They had money invested overseas. And they're like, oh my God, this lockdown might be 3, 4, 5, 6 months. We don't know. I'm going to need a lot of cash. So they bring money home from investments around the world. Let's say they exit the American stock market and they bring that cash home, okay, to their broker at home. That creates demand for rupees because suddenly their American stockbroker, right, sells the stock. It's in dollars now. And then they have to send the money home back to India. So they have to convert the US dollar. So now the demand for dollar goes up. So the dollar strengthens. And they right. But then they they take the dollar and then they convert that to rupee. So now demand for rupee goes up and the dollar weakens. Right. And now because of this demand for rupee, from not just one person, but lots of people, all at the same time, the value of the rupee goes up because there's millions of Indians with money cashing out of investments around the world, and they're like going to cash. Demand for cash floating around the interbanking system globally for rupee skyrockets, driving up the value of the rupee. Now, you're in charge of the Central Bank of India, and you're like, holy crap, look at the value of our rupee. It's skyrocketing. That makes our products and services less competitive to Chinese products. Let's say a company that's deciding whether to manufacture something in China or India will find India is more expensive in terms of rupee. And you're like, well, that's not good. Like, we understand why there's demand for Indian rupee, but we don't want the value to go up. This is going to be a problem for us. Not only did we shut the economy down, but now the value of the rupee is up. This is going to kill us. So the Central Bank of India says we must address this sudden increase in valuation, the sharp increase in appreciation in the rupee, because it's bad. See, remember, India is an exporting country, so an increase in value of their currency is bad. They don't want that. So the central bank says we must do a couple of things. One, first of all, we must devalue the currency, right? And then we have to worry about inflation and all that. Also, they don't want to like make it a permanent scar. You don't want to like just monetize debt or increase the amount of rupees. Like, you don't want to just print rupee, because that would be a way to devalue, but then there's no value in the rupee. So then it skyrockets out of control, and central banks don't really like to do that now. And if you're a central bank in a third world country, you've learned these problems before. Printing some money on the very short run will help you, but on the long run is a nightmare. So here's how you do it as a central bank, in particular Central Bank of India. You want to maintain your balance sheet of the central bank, yet at the same time weaken the currency. So here's how they did it. The Central Bank of India bought U.S. treasuries, they bought gold, and then they bought foreign cash. Okay? So let's just say there's $1 trillion worth of rupees at the central bank. They went out and bought $1 trillion worth of gold, so now they don't have rupee anymore. they traded the rupee for gold. So now the rupee is in the interbanking system, gold is in the vault. What happened to the balance sheet? Nothing. Right? Now there's, of their $1 trillion worth of assets, some of it is now gold and less of it is cash. They got rid of the cash, which increases the amount of rupee in the global market, which then lowers the value of the rupee. Okay? And then what? Then they buy U.S. treasuries. Well, they get rid of the rupee, they buy the U.S. dollar, then they, with the U.S. dollar, buy the treasury, driving up the value of the dollar, lowering interest rates in the United States. Meanwhile, those are assets that sit in the balance sheet at the Central Bank of India. What's happened to the balance sheet? Nothing. They got rid of some cash, but now they have treasuries and gold and less cash, but it all balances. Cash, gold, and treasuries. Cool. And then they go out and do some other things. Maybe they buy some pound, they buy some euro, they buy some dollar. Same thing. They get rid of rupee, increasing the quantity of rupee globally, lowering the value per rupee, but in exchange for that, they got foreign currency. And it sits in the vault at the central bank. So nothing changed except the value of the rupee went down. So this is gold as not just Central Bank of India, but central banks around the world fighting the unintended consequences of a economic lockdown. And then once the economy started opening back up, they're like, oh, you know what? We don't need to do this anymore. Okay? And they're selling off some of those assets again. Isn't that neat? During the complete lockdown, which was the 21 days of March, less than 25% of India's $3 trillion economic movement was functional. Wow. Is there, did they reopen the economy yet? Yeah, well, now they have to fight maybe too much devaluation and increase in inflation and all that kind of stuff, right? So yeah, it's trickier to do. But it's not impossible, right? Like they'll do fine. Japan, however, did things like, they own something like 2/3 of the Japanese stock market. I don't know how you unwind that. I really don't know. Is it a problem that the Central Bank of India holds a lot of gold? It's not that big of a problem, right? You're like, really? It's not that big of a problem. But I can tell you, as this was rising, I was sharing my research with people, and I was telling them that when we got to the top here, it was the highest level of precious metal and foreign exchange reserve holdings that the bank has ever had in its entire history. Good to know, right? Oh, for sure. Okay? But if you have questions about how India is going to unwind this balance sheet and normalize it, you should start doing your research. You should Google it. Go to the website. Get on it. Be an expert. Okay? I get a whip and you get a saw, baby. All right. And we're just sitting here on XRP. XRP jumped, what was it, 500% in a week. Bitty, 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 can't you see? Sometimes your moves just hypnotize me. I just love your old jazzy ways. Guess that's why they're broken, you're so paid. So yeah, just farting around now. Farting around. I'd have to put a sweater on, gold dang it. All right, let me take another 1 minute break, get a sweater, get a coffee, all that kind of stuff. BRB in 2, maybe 1, 2, 1. Yeah. Yeah, boy. Yeah, it's cold in Georgia. Georgia. Cool. Yeah. It's like Africa hot. That's my favorite line from Biloxi Blues. So anyways, Show and tell today, show and tell. I got this in the mail yesterday. Oh. What do you think of that? Yeah, boys. Yeah, officially done. Officially done. Master! Master! Yeah. Yep. Now I'm just another Harvard a-hole. Yep. That's how it rolls. Thank you very much. I am now a master of management and finance with a specialty in alternative investing. Yep. Thank you, Highlander. Prince Philip. Hey, I'm not American. It's not illegal for me. Anyways. Yeah, sorry. Once again, I know I've said it a million times, so one of the funniest moments ever in South Africa was me waiting to check out of my hotel, and they're like, yeah, it's only Rand. And they're all laugh. Everyone's laughing. It's only Rand. Don't worry about it. How do you like them apples? Yeah, it's true. I learned macroeconomics from a senior economist at the Fed. I also took 2 different classes from people that worked at the, she did both classes. I did one on minimum wage. So we debated the minimum wage. We debated social welfare. And so those 2 classes, super fun classes, but she worked at the New York Fed. And my macroeconomics professor worked at the Boston Fed. Alternative investments being Bitcoin. Things like merger arbitrage, leveraged buyout, distressed investing, venture capital. And since I used to be a venture capitalist, that's a specialty. Obviously, hedge funds, like long short equity type plays, those kinds of things. And so what I'm actually kind of interested in the research that I've done. So I even did some research at Harvard Business School this year as well, about the difference in structuring these deals, and in particular, like the legal contracts. And so I'm fascinated, like if you invest into a Forex fund versus a venture capital fund versus a real estate fund. So I've taken multiple classes on commercial real estate investing and management and all that kind of stuff. So like if you think of like, well, if there's clawback provisions in real estate, in real estate investing, should there be a clawback provision in venture capital? Should there be a clawback provision in investing into a Forex fund? Like, but they don't cross over. But why not? And could they? And maybe should they? And could I structure a Forex fund in such a way that it's more attractive from a structural point of view, where everyone is out like you running around talking to rich people like, you should invest in my Forex fund because we're better traders. And I come through and I'm like, this is actually structurally a better deal for you. And they look at that and they're like, we've never seen anything like this. And I'm like, yeah, but I'm the man. Right? So the difference in like, what can I learn from a leveraged buyout firm? What could I learn from a distressed investing firm? What could I learn from a long short equity hedge fund? What can I learn from a real estate investment fund? Not in trust, but like literally like a pooled fund into real estate, right? I mean, there's a lot that you can borrow from to create something that's never been done because everybody knows their niche. You notice that? Everybody knows their niche, but they don't know anything else. So, anyways. It's amazing what education can do. All right. Your 5-year-old at JC's house, why is there a pig head behind him? Yeah. Well, let's just say you'd rather be a bull. Sorry, you'd rather be a bull or you'd rather be a bear. Let's just put it that way. Because they look healthy. Okay. La-di-da-di-da. Let's go. So bitty, bitty, bitty. So we did gold. We did oil. Guess we could just leave commodities for now. We did some exotics. Take a look at some yenis. Beautiful, huh? Oh, you know what's happening now is the stock market's opening. Hang on.
You're listening to Trade
Yeah,
the
right,
News.
right this second, too. Right to the minute. Yeah, he does want to be a bull. Yeah, that's how you do it. JC, you made a very wise decision. Yeah, Javier, private equity is another one. Yeah. And of course, then there's different forms like that you can consider private equity. So not all private equity structures or vehicles are the same. Okay, well, let's go back. Aussie swinging, obviously. Let's do Kiwi, though. Boo-da, 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 doo. Yeah. Boo-da, 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 boo. Ooh, yeah. Who said Forex is a random walk, huh? It's so obvious. It's crazy how well it behaves. Boo-da, boo-ba-da, boo-da, boo. All right, so what I'm looking for in the near future to wind out the end of the year, really, is this move in here. So that's that. And now I can play this on short time frames if I wanted to.
Currently, the OPEC plus production increment, Energy Intel is saying that it will be split equally among OPEC and non-OPEC members.
That makes no sense. Russia's like, okay, we'll deal with that. Sure, we'll sign your stupid piece of paper and we're going to cheat. That makes no sense. Eric says, sounds like interesting stuff. A lot of late nights. See, I already know all that stuff. So the Harvard Business School stuff was more like sort of research towards them, right? Okay, So I'm looking for some up. We'll see. That's trying to stabilize. Looking for some up. So we've turned this around nicely. So we got some up there. So just shy of 500 pips, 480 pips. Cool. See if we can get a few more. So CAD's fine, pound is fine, Kiwi's recovering. Remember, APAC was weak. Okay. Right now, it seems like it's doing what it's supposed to be doing. Can you see all the things I'm measuring here? Once again, we're approaching the average. By average, I mean mean. We're running into the trend of the average price over this period since the beginning of May. Isn't that nice? 2 standard deviations above, 2 standard deviations below, and then the average mean. Cool, right?
It has a couple of increments you can see.
Oh, did I miss a question, Con? But Euro is not moving. Yeah, well, first of all, it's a lot of these. Some of these trades, guys, are at the month, like let's call it year-end target. So, Kashif Khan says, "Hey, why is euro dollar not moving? It's hit target levels." Okay, euro dollar has hit the conservative target for December. So people are cashing out and they're done they're taking the rest of the month off. They're done. And I talked about that yesterday and the day before. Like, people should know this. It's like people are done. They're done. And I described it as they're getting on the jet plane with their girlfriend. They're flying out to the Caribbean and they're like, 2021, best year ever. This was a huge year for the markets. Huge. Okay, and then let's take a look at Aussie. Oi. Okay, up, down, buy, up, down, buy.
Real strength in PMIs, mortgage applications, capital goods, and other areas.
So it's trying to gather some strength. But you can see, like, my monthly projection here was this price. Looked like we're going about 77.5. This was done back in November, third week of November. And we just narrowly missed it by like 15 pips. Like, so why are some of these not moving very much? Well, most professional traders are like wrapping up, where amateur traders are walking in like, what's going on today? What's going on today? Well, the mood right now is many of the traders are leaving, which is going to get tricky if many market participants leave because they've done their analysis, they've done the trades, it's obviously over. Then what's going to happen is you're going to have a couple of weeks of just amateurs fighting amateurs.
Those still see the sharp V-shaped recovery.
Right? It's just going to be amateurs fighting amateurs. Once the gladiators are gone, it's just a bloodbath. Free for all, right? Free for all. Imagine if half the market didn't know they were a bull or a bear, or if half the market didn't know anything beyond the next 4 hours. Where would the market go? See, like, professionals know what they're going to do months in advance, weeks in advance, days in advance. I know what I'm going to do in January.
Next, we have to put some money into airlines, small restaurants, and extend the PPP.
So if all the pros leave and take the money off the table, we're just going to have people that can't see beyond the next 4 hours. It's just going to be a free-for-all. It's just free-for-all. It's going to be crazy. Right? We Buy Ugly Houses says, I thought euro dollar and pound dollar moved the same. Niet. Now, typically, yes, but not with Brexit. There's no way euro and Brexit. So the thing that moves pound right now is Brexit. The thing that moves the euro right now is the dollar. Nobody wants the euro. Nobody wants the euro. So it has everything to do with the dollar. So I mentioned the BIS earlier, and I brought up the website, but I forgot you can't see what I bring up here. So anyways, I went to the BIS website. The BIS is a central bank for central banks. Okay? And according to the BIS, and they track because they see central banks. Remember, central banks are the ones that move currencies around. They can see the central banks and what they do, and 40% of the entire Forex market is euro-dollar trading. And you can attribute 90% of that to the value of the US dollar, the reserve currency for the entire world. It ain't euro with negative interest rate, 12% unemployment, and no way for the central bank to actually manage the economy. It's all the dollar.
Rally to new highs, 36.8350. The higher in the S&P futures, the S&P cash up 140 points. Excuse me, up 17 points, Dow up 140 points, and the Nasdaq Composite of 28.5.
Okay, so euro dollar goes up. It just tells me that the dollar's falling, and I like that, by the way. I love a weak dollar. That's my thing, baby. That's my bag. Okay. So we'll see if we can keep these climbing. Check the indices quickly. Okay. So I am now 2,500 pips profit for an internal rate of return of about 425%. Absolute return about 8%. So that's good. It's all right. It's all right. What should we move to? So APAC's trying to, well, I guess maybe not. I see it in the currencies. Like, I think this is going to improve. This is going to improve. We're seeing it now. That's what's up. Oh, that water's good. Gotta keep my eyes on the time. As soon as this is over, I have a meeting with a banker. We'll see. Bankers don't like giving away money right now. It's just amazing. I did a deal with a banker in, my God, was it May? I still don't have the money. I'm like, send me the money. Send me the money. Send me the money. Send me the money. So now I got to fund a different project. And I'm wondering what they're going to say. And it's a distressed deal that I want to grab. And so I got to get different type of funding and stuff. And I'm like, dude, this takes forever. Forever. It's crazy. If you're a client to tradersway.com, yes, I do this every day. This webinar you're attending is at FX Street, and I've been doing this monthly webinar now for 14 and a half years. Also, feel free to join fxbootcamp.com. That's my training site. There's yeah. So visit.
On the stimulus, and Wayne McDonell said he's open to compromise. McDonell goes on to say he can't promise anything.
Con, I think they're promising me because I locked in. It was great. I did this deal with the bankers at the all-time low of interest rates. Like, me, I track this every day, right? So literally the lowest day in the entire history of banking. I get this deal. Contracts are signed. They're going to move money. But they're like, it's going to be a while, So, like, the underwriters are just dragging because they're probably knowing they're not going to make money on the deal. So they're trying to make money some other way before the deal gets done. So before they give me the money, they're going to put it in the market and make money over there. And they're like, yeah, this is complicated. It's going to take time, maybe in a week or two, right? Meanwhile, they're making money somewhere else. And then they're going to come back and give me the money for free because not for free, but my interest rates are so low, right, for funding. Like I'll give you an example. A friend of mine from Harvard, he funded a deal. Now the guy had to put up huge collateral, but he funded. I think his client bought a competitor, and so expanded his business. But he funded the buyout. Right, the merger was funded at I think it was 1.3%. Oh, what? Now he had to put up, he had to put up a lot of collateral. Like he had to leverage his whole life to get it. But they're like, yeah, we'll give it to you at 1.1%. You're like, no way. No, I'm not a paymaster, but what a good job that is, though. Eh? So he had to put up a lot. I don't want to put up a lot. I just want money, right? So I'm waiting for one deal and then the next deal. There's always a deal, right? There's always something going on. But it's amazing. Like that's what I think they're doing. They guaranteed the money and then they're like, oh crap, we're not going to make any profit on this. So they're delaying making profit somewhere else with the money they promised me. And then once they made their money, then they'll give me that money and say, okay, we didn't make money on the deal, right? We didn't make money on the vehicle, but we made money on basically spreading it, right? So anyways. So now I'm going to try another one, and we'll see how bad that is because that's going to be a distress deal. So we'll see. It'll be very interesting how they want to structure that one. All right, so dollar weak, good. Yen weak, good. CAD recovering, good. Kiwi and Aussie, I think, are going to recover. But remember, these are 4 hour. Right, these are 4 hour, so that's basically like where we are for the week kind of thing. And then pound recovering. So remember, we started where this was weak, this was weak, this was weak, this was strong, this was strong, this was weak, this was weak, this was weak. I'm like, well, I got most things telling me strong, and the other 50% are telling me weak. I'm like, it's not good. And now we're seeing more of what I want to see: weak, weak. Strong. It's not there, but this is improved, and this is improved. So sort of Kiwi's the laggard. Oh, I don't do stuff like that. Most of those programs, whether it's Fed programs or banking programs, I don't qualify because I'm too rich, right? Like they're for poor people. Like honestly, that's what it is. They're like, oh, you don't qualify, right? So you have to structure deals through financiers, not really banks per se, not traditional banks, anyways. Yeah, anything over a full yard is more and more complicated to move. La 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 la. What should I look at now? Dude, it's been a long week. I've been up since 4 o'clock in the morning. So like I said, I think most of this market is really looking to exit. I don't feel like there's a lot of new trades, a lot of new money coming in. I feel like we're, like, as far as today and what I discussed yesterday as well as today, what it feels like is there's one more trade that people are going to nervously take, and then we're then gone, right? Okay. Oh yeah, so let's go back to that Euro trade. If you remember how I had that set up, I said we need evidence that even though there was a sharp down, we're on next week's support. So where was that? Dollar maybe? And hopefully that was useful. Yeah, right here. There we go. Okay. You remember I drew the support. So I started on a 1 hour, I guess. Yeah, I did this on a 1 hour. Remember? I drew this across. I drew the line. I did all this. Then we hit this lower pivot. Remember we were talking about, I added the 21. Do you remember this? And then I added the 55, all that kind of stuff. And then I dropped into a 5-minute chart and I just left you there. I drew like 9 reasons for support. If it went lower, it would have been a problem. Okay, so now you have to decide, is this climbing up or is it not climbing up? So now you might want to like look at a confluence of information. So like, for example, we could put this on this confluence, but I don't know if you want to do it on the day trade or not. Once again, let me highlight, if you don't know pivot point trading, first of all, I think it's pretty dangerous. If you can't, like, I find it scary. If you can't predict the top and the bottom of the market, I don't know why you even trade. Like, think about that. You don't know where this is going? You have no clue where the top is? How could you trade like that? Just crazy, right? So anyways, we knew this weeks ago that the conservative projected high for euro dollar was 121.64. The aggressive target now is 122.47. So you only got like target A, and you only have target B. But I'll reiterate that we knew this weeks ago. So it comes down to these market participants. Are they willing to stick around another week or two to try to get this? Or are they like gassing the jet right now? Look at me. I'm YouTube's biggest real money options trader, and I have a jet. Am I the only one that gets those ads? I'm like, nice t-shirt, dude. Well, I'm hip and young and approachable. Mm-hmm. You get those ones too? How do you find those trades, dude? You're insane. Well, you can have a career just with one trade a day, one trade a month. Doesn't he say that? Just one trade a month can give you financial freedom. Like, oh my God. Yeah, so funny. So here's the thing, guys. You need to decide what you think the market participants are going for. Are they going for the conservative target? I mean, dude, it's only the 4th day of the month. Are they really going to bail out on the first week of December? Honestly, what would you do if you managed $1 billion fund? Would you like, that's it, I'm not doing anything else, I'm over, I'm taking the next 4 weeks off? Or do you think they're going to stick around like, well, let's see what happens next week? What about a stimulus? Okay, so this is, but you may not even know that these are the questions you should be asking yourself. But that's where we're going. Okay, Google, when's the next FOMC meeting? She didn't do it. When is the next FOMC meeting?
Here is information from IG.com.
A little ad right there. So, of course, it doesn't bring up any useful information. 15th, 16th? Is that right? 15, 16? 12, 16? I would say like that's probably the year end, but I don't know. So 2 or 3 years ago, I did an interview with FX Street on December 19th. And I said, I'm in a boatload of Japanese yen trades. I'm long all these pairs, a boatload, an entire portfolio. I've been sitting on it for months. And I'm about to dump the whole damn thing and then start selling into that void. And that was the exact top of that market. That day, the day I said I've been in all these trades and I'm about to do it. It could be today, it could be next week, but I'm about to do it. And then boom, as soon as I said it, it printed the top. Market turned red for days and days and days, all for weeks and weeks and weeks. All the Japanese yen pairs that were up and 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 up for like 16 weeks straight, suddenly on that day, down. That was the 19th of December. What was that, 2016, 2017? So that's in the back of my mind. Is the 3rd a little early? Or the 4th, I should say? Can I stick around one more week? So I'm more interested in those types of questions. What evidence do I have that we can get through 121.68?
On half a minute to the October factory orders expected 0.8%,
Ex-transportation expected 1.1%. With that, we'll get updated durable goods data. October final expected 1.3% for durable goods orders. .0% for factory orders is 2 times higher than expected. Durable goods orders unrevised at 1.3%. Factory orders ex-transportation at 1.0% is 1 time lower than expected. Durable goods ex-transportation at 1.3% is in line with the preliminary. Capital goods orders non-defense at 0.8% is up 1/10 from the preliminary. Capital goods shipments 2.4% is up 1/10 from preliminary. Factory orders back month revised up 0.2 to 1.3%. Ex-transportation revised at 0.4 to 0.9% in the back month.
Huge volatility on that news. Raymond wants a jet. It's funny how you have psychological attachment to these things, and when you get yourself into a position to do it, it just royally sucks and it ruins all your dreams. You're like, I want a Lamborghini. And you're like, this is the crappiest car I've ever owned. I hate this Lamborghini, right? And then you're like, I want to buy a boat. And you're like, oh my God, I hate this boat. It's nothing but a pain. It's just sucking my cash out of my bank account. Maybe I'll get a jet. I hate this jet. Owning a jet sucks. I never use it. It sits there. It costs me fees. And then the one day I want to fly it, they're like, oh, well, your FAA certificate's out of date. That's another $78,000. You're like, son of a bitch, I just want to be happy, right? Just all your dreams. All your dreams gone. You know, and it's never, I was looking around, do I have a Rolex or something laying around? It's like one of these things like, I don't, it's funny, I always got something laying around. My wife must have cleaned my desk. Really? I don't have a watch laying around? All right, maybe the maid is stealing from me. All right, I usually have a watch laying around. Total waste of money. Yeah, I can't find them. Total waste of money. You're like, look at my watch. You're like, that's dumb. Right? Look at my watch. Wow, you don't know how to spend money. Right? And then even like behind me, right? Behind me, I'm like, look, I got a piece of paper. You know how much I spent on that piece of paper? Well, luckily I didn't pay money for the paper. I went to Harvard to be an inspiration to my children as they go through middle school. And by the way, in middle school, you got serious math, serious homework. They're loaded with homework. It's crazy amount of work. And they're all in gifted programs and in accelerated programs and STEM programs, all of which are very difficult, like crazy difficult. Honors and stuff. And then they do the Duke tip programs in the summer. So meanwhile, while they've been doing all their homework, I've been doing mine. And, an A student too. But that degree I showed you, that piece of paper, is pretty expensive, right? Makes a Rolex look cheap. But yeah, so spending money on a boat. I had a boat once. I'd never do it again. Yeah, I'm here. Yeah, getting a card is probably the smarter way of doing it. All right, so this is the big hurrah now. I'm really waiting to see if we can do this higher high. The news is out of the way now, right? We went through the 10? Yeah, so the 10 is done. So all the news is out. Now we need someone to go on Bloomberg and CNBC and say, yeah, we're going to do stimulus. We're close to bipartisan support. Boom, we're off to the races. I hated having a boat. It was a real problem. Vandalism was part of it. So someone broke into the storage yard, stole some things out of the boat, damaged a few things. But then, just to be really fun, like one of the things they stole, by the way, was the brake lights off the trailer, which is right. And then they're like, you know what? While we're at it, we're going to slash the tires with the boat on the trailer, by the way. And it's not a small boat. And you're like, you're shitting me. So now we got like a boat that weighs thousands and thousands of pounds and on a trailer, and they've slashed out all the you're just like, oh my God. So it was just it was sad. It was sad. My wife's like, the boat was awesome. I'm like, it sucked. It sucked. So yeah. So last time I owned a boat, or last time I was on a boat, I think it was Lake Lanier or something like that, or one of the lakes in Georgia. And you show up, it's in the water, it's clean, it's gassed, it's insured. Like, hell yeah. Oh, the last time I did that was Georgia is great. It has more than one Ritz-Carlton. One of them is on a lake. It's a resort on a lake. And I'm like, yeah, at 2 p.m. I want to take the boat out for a few hours. And they bring it right up to the dock at the bar. like, oh, Ritz-Carlton, I love you. And you just get on the boat and you just cruise around. Then you're done. You're like, take care of it. And you're like, let's go to the bar, everybody. And off you go. It's just awesome, right? Just awesome. That's the way to do it. Owning a boat sucks. Sucks. I would never do it. I say I'd never do it, but if it was $100 million boat, maybe. I'm not there yet. All right, so I have my eyes on the prize. You might think I'm babbling. This is what I'm doing. I'm watching this on a 5-minute chart. I need some up on this for me to feel comfortable. There's some nice boats. Yeah. The thing is, and I've taught this a lot before, so we'll keep this brief, I think. Here, usually this ends up being a speech, but you should take your money and buy income. Okay? Buy something with income. Buy an apartment building. Right? And your net operating income, which is your rent minus your expenses, that's your net operating income. Then you got to pay the bank for lending you all this money. 75% of it is owned by the bank. So 75% is owned by the bank, and you give them like 5%, give them their fees. So at the end of it, you have this profit. And of course, you don't mow the lawn, you don't do all that. It's all taken care of. It's all part of the expenses, so that comes out of the NOI. So at the end of the year, you own a piece of paper somewhere that says you get rights to all the profit the income produces, and of course, you have to pay the bank for their piece, so that's fine. And then, of course, you can depreciate and all that kind of stuff, which is just golden in the United States. And then what's left over is just your money. And so let's say you own a piece of paper, you don't even visit. Maybe the apartment building's not even in your city. Doesn't matter. You're like, oh, I own an apartment building in Florida. Great. So at the end of the year, you have $100,000. What are you going to do with it?
More details on this Danish vehicle tax agreement, government to finance 775,000 green cars by 2030 under the deal.
So what are you going to do with this $100,000 every single year, year after year after year after year, while you do nothing? Jean-Guy, go buy a nice boat. Who bought the boat? The renters. Did you spend your money on it? No. Okay? But never spend money. Never spend money. Never, ever, 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 ever spend money. Now, the degree is interesting, though, because, let's be honest, I can roll into a room and say, I have a bachelor's degree in macroeconomics from Harvard and a master's degree in management of finance with a specialty in alternative investments. I'm the smartest person in the room. And most people will believe it right off the bat. And just like that. That's worth money, especially when you're trying to raise money. Let's say you're a Forex guy, right? And you're trying to raise money. And the investor says, well, how do I know you know what you're doing? I have a master's degree from Harvard. And they're like, that's good enough. I got you. Seriously, it's a vet. Because they're like, well, I don't know how to vet your background. Okay, trading history and stuff. But they still don't know who you are. Well, they know 99% of people that want to go to Harvard can't. You're not good enough. It's just, that's it. You can't even get in the gate. And so I got into a program, literally 99% of people were rejected. So I got in. Yay, me. 50% of the people failed to even get through their program because it was too hard. Good. So I'm one of the 50% that graduated through the program that is now canceled because it's too difficult. And I have an A. I'm an A student, A- student, but whatever, right? So I'm done. It's a vetting process. So if someone says, well, how do I know you got what it takes? How do I know you're going to see this through? How do I know you have discipline? How do I know you're not a daydreamer? So I got this degree that says I'm one of the best in the entire world. Cool. I got you. I believe you. And that's it. So that's probably, it's hard to say it's an investment, but it does produce return. Especially if you are, and you got to put this in the context. When you are in a world in which many people will vet you because they're thinking, who is this guy? Why should I trust him? How do I know he's going to follow through with what he says? And I got this degree and I got that degree. And then they're done. And it gets me to the next process. Now, like, okay, do I like you? Are you an a-hole? You know, okay, you got through Harvard, but are you trustworthy? Or are you really? Like, let's get to know each other. But it gets you through that process, right? Right? Oh, you had to fire a contractor. Yeah. Oh, yeah. Yeah, you know what? I'm in the South, and I've only found one contractor out of all different types of contractors that I respect. That's it. I have one. And I respect him a lot, in fact. But yeah, maybe it's tough these days. There's no work ethic. There's no sense of professionalism. There's no sense of personal pride in the work. It's just crazy. Yeah. Yeah, it gets you through the first door out of 7 others, but it's important. Okay? Right? Kashif, if you can't be shortlisted, then you don't even have a chance. Yeah, referral from a friend. They always suck. I mean, that's not how you... So anyways, so that might be considered an investment. Yeah, whatever. But my message to you guys is like, don't spend money unless there's a return. Don't take money out of your bank account and buy a TV. Don't bust out a credit card and go on vacation. The last vacation I went on, I took my family to the beach. We stayed on the beach in Florida. Okay? The government gave me the money. I didn't spend any money. We got a $3,000 deposit in our bank account from the U.S. government. Stimulus package. So I, as a good green card holder, I took the money and I spent it because that's what they wanted. They wanted me. So we went to restaurants in Florida. I paid for the Airbnb with it, and we rented beach chairs, and I bought a lot of liquor. Right? Like, I spent it and I left the $3,000 in Florida. And by the way, I talked to all the vendors and stuff, and it was amazing how much these guys had to hustle just to stay alive. So cool, but I didn't spend money on that. Why would I spend my money on that? Would be horrible. So you should, whatever you do, you should save your money for something that's income producing. So most of you probably don't have a lot of money. So what you do is you start with Forex. You never, ever, 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 ever spend money out of your Forex account. Ever. I'm talking for the next 15 years, you're not going to withdraw any money from your account. Otherwise, you will stay poor. If you're poor now, you'll stay poor. You're not allowed to spend that money. Okay? You need to own income and assets. Okay? And your Forex account will grow to be a business. Okay? So you got $5,000 in there now. You're producing 3% return per month. You're doing 50% annual rate of return. So in a year, you'll have 7,500, right? In 5 years, you'll have 25,000. In 10 years, you have 100,000. Okay? In that account. If you can, while you're trading, you need a side hustle. What's your side hustle going to be? Let's say you're going to work on your trading account and have a day job. So you're going to need to know how to swing trade. If you don't know how to swing trade, forget it. I don't think you're going to be able to do it because you won't have the time. You'll make dumb decisions. You'll trade at the wrong time of day. It ain't going to happen. Okay? So you're going to need to learn how to swing trade. Right? And you'll swing trade and day trade 1 hour a day. That's it. And your side hustle will be a day job. Well, Ed's saying, interesting, his side hustle is FX. Good. To me, it's the same thing. Right? Because unfortunately, your day job is going to take 8 hours a day, right? So you're going to need to know how to swing trade so that you can do Forex. But sure. Right. So anyways, I've been doing this a long time. So anything outside of Forex would be something different, but I get you. So you're going to have to go through this period where you're going to need to master swing trading and be in trades. Your trades should be easily 300 pips each, right? Kind of stuff. Great. So you're going to do that for the next few years. And you're going to have a job to take care of the bills, to have food, to have medicine, put shoes on your kids, and maybe, just maybe if you can, shove a few extra dollars into your trading account. But the number one thing is you cannot turn to your trading account for income. No. Okay? So 5 years goes by, Ed, and you've become a very good a swing trader and position trader, and you're getting really good at fundamentals, seasonality, all this is coming together, and you have a really nice track record. What's the number one thing you'll probably want to do, Ed, once you got that 5 years of profitable trading under your belt? What's the thing you're going to want to do most? Quit your job. You're like, I can't have this to be my side hustle. My day job is making my FX difficult, but my FX is my way out of my JOB. So once you have a proper track record of success and knowledge of the industry, now your new side hustle will be your Forex management company. It's going to start out with friends, families, and fools, but you want to get to a point where now you're only earning 20% of the profit, let's say, and some management fee, or maybe 30% of the profit, no management fee. Let's say that. So your clients keep 70% of the money. But here's the thing. You need enough assets under management so that you can offset the loss of guaranteed income from your day job, but now you can focus on Forex 24 hours a day and really refine your skills. You're making your investors happy because you're producing steady income with low volatility, and they compensate you with that so that you can live. And here's the cool thing. You get to keep 100% of your money in your Forex fund. So now your income to pay for food, medicine, put shoes on your kids' feet, and pay your, pay your mortgage and all that, that's coming from your second asset now. Not just your Forex account, but now you have a Forex business. So now you're living on that income and you're growing and growing and growing and growing and growing your main account. You see that? And what will happen is you'll get to a point, because then you'll do well there for 2 or 3 more years and more people will invest. And you can increase your lifestyle, or you can take that extra income now, the extra income on top of what you needed to survive. Maybe you stuff that into your account because you're growing that by 50% a year. So you're going to want to put everything into that and live off, right? So at some point, though, you'll have more than enough money in your Forex account. In fact, there's enough where there's too much. Like you don't need to trade billions of dollars to do this right. So what you'll do, though, is you'll have too much. Like you'll notice that maybe on one standard lot is enough. Like you're making you make 2,000 pips a month, you're trading one standard lot, and you're like, dude, that's 20 grand. You're making 20 to 25 grand a month. You're like, I'm good enough, right? You don't need $1 million in your account per se. You're like, and if you're low leveraged, you don't need so much. So even if you, percentage-wise, you can still kind of take it out and say, well, I'm going to treat this as my Forex money because your leverage is so low, but you're going to take it out of the account. So it actually, on the account, it raises your risk, but you're trading the size in such a way that it's sort of, you're philosophically raising, you're just moving the cash out of this account earning zero interest because you're not 100% in all the time, right? And you take this stack of money, and what do? Spend it? Buy a Rolex? Go to Harvard? Buy a Lambo? No, you put that into income producing property. You buy an apartment building, you put in 100,000, the bank puts in 300,000, whatever. You put in $1 million, the bank puts in $3 million. Cool. But you're like, well, you're still trading your account like you have it. Your net worth hasn't changed. Do you notice that? Your net worth hasn't changed. It's like the central bank, right? Got rid of rupee, but has the same amount of rupee they got rid of. They have the same value in gold, so it balanced. So you're just saying, take some out of this Forex account, the stuff that you're not actually using, and you deploy that in income producing real estate. So now if you bought properly, your net worth has gone up, and you've exchanged a pile of cash for a flow of income. So you see this? And over now a period of 10 or 15 or 20 years, you might make more on real estate than you do in Forex. And you're like, well, I have to work really hard at Forex where I can just sleep and make money in real estate. Like it appreciates every day. And every month I collect rent. I don't do anything. And all of a sudden you're like, I got enough on rent, right? Like I don't need Forex, but you love Forex, so you do it and whatever. But you see how you make some money on your Forex, you make some, your personal account trading, you're making some money in your fund, so you're a fund manager, you've spread some money into income producing real estate. So now you're kind of diversified, right? Now you got 3 sources of cash, your Forex trading, your Forex fund management business, which has income, and now your real estate, which you're collecting rent.
Around flat, consolidated.
And you see that? And now your Rolex, your yellow Lamborghini, your 110-inch 4K TV, it's all free. Do you understand that? It's not money you're taking out of your pocket and your net worth just went down and you took money that someone else gave you, like you have a job and a boss gave you money, like, hey, thanks for producing $10,000 worth of value. Here's $1,000. Thanks for making me rich, bro. Here's a pittance of pennies, right? And then you take your pennies and you go to Sam's Club or Walmart and you buy yourself a big TV and you're like, now I can beat my depression. This TV is going to make me so happy, right? This TV is going to make my life worth living. I can watch Netflix in 4K. You're like, dude, oh my God, that is not in existence. That is not in existence, right? So you see how I would recommend it. You need to get to a point where you can quit your job, stop working for other people, stop taking their crap. Please, Mr. Boss, can I take Christmas off, please? Please, can I have a day off? You're like, oh my God. Well, if you fill out this form 90 days in advance, like, screw you, I'm taking the day off, right? Amazing, right? So instead, you got to get rid of the job. You got to specialize and focus on Forex 24 hours a day, and you never touch your money in your Forex account. You got to grow that. Okay? Right? So I have a program where I'll help people take a $25,000 account and turn it into hundreds and hundreds and hundreds of thousands of dollars. Isn't that nice? It's a good program, right? Yeah, real money. True. They're not allowed to spend it. Because it requires hundreds and hundreds and hundreds and hundreds of thousands of dollars to join a Forex fund. Right? So I was telling a story, I don't know, it was about 3 months ago, I guess. I was asked to join as a general partner in a new venture capital fund in Silicon Valley. Why? It's my specialty. It's what I do. Now, I turned them down, but I said, send me the paperwork. So they sent me the paperwork. And of course, there's a provision, and there's always this provision. It's just normal. And it's a risk management issue, and any limited partner investing will want to see this. So it's in all contracts for general partners of venture capital firms, because a limited partner is going to need this to mitigate their risk. So this is just how many funds, like a venture capital fund, works. And they said, okay, you can become, we want you to be a general partner in this venture capital firm. And here's all the great things, and you'll get this access to the carry and profit and everything, and you will need $3 million in cash to join the team. Absolutely normal. Why? Because a limited partner now, not the one making the investments, the ones that are giving you money to make investments, they're going to say, well, how much skin do you have in the game? Oh, I don't have any money. But you just told me you're going to be super successful. Oh, I'm going to be super successful. We're going to make tons of money, but I don't have any money now. I'm poor. I got no money, but I want you to give me $100 million. They're like, screw you. Right? So now imagine a Forex fund. You're like, I'm the greatest trader in the whole world, but I don't have any money. Like, how do you overcome that? If you're going to work in a Forex fund and they're going to give you a stack of $1 million, for example, what are you going to do? You say, yeah, I've been trading my demo account for 5 years. I'm awesome. They're like, dude, we're not giving you $1 million. What's wrong with you? Right? Like, think about it. What's wrong with you to think that way? No one's going to say, well, okay, you're really good on paper, but you got no money. But, oh, why don't you just have my money? It doesn't work that way. In any investment, it will never work that way. Okay? So what happens then is you invest into the fund. You, like me, having to put $3 million into the venture capital fund as a way for me to show I have skin in the game. Right? So if you're going to work for me in my fund, I'm like, okay, well, put in $500,000. You're like, $500,000? I don't have any money. I'm like, well, you just told me you're the world's greatest trader. Yeah, but I don't have any money. Then it's not going to happen. So if I'm going to help you become a professional Forex trader, I got to help you make your first $500,000. Because if you don't got any money, no one's going to invest except your drunk uncle. Right? So it's just how business works. It totally makes sense. Right? Now, the limited partners, they're going to be way wealthier than you. But you have to say, well, what percentage of your net worth is tied into this fund? You're like, well, I've got over 5% of my net worth in this fund. They're like, okay, we think that, we like that. That's good. So, all right, we'll put in $100 million, right? That kind of thing. So you got to get there. And now, if you're a fan of Billions, there's actually an episode in Billions, right? There's actually an episode in Billions where they find out that some of the traders have money in the secret fund. And that the secret fund is actually the employee pool in the general fund. And it's a huge privilege. Because imagine now you've invested your net worth in the Axelrod fund with all the limited partners. But of course, it's your money, so you don't have to pay for the limited partners. You're not collecting 20% performance fee. You're collecting 100% fee. The flagship fund. There you go. Okay? This is what that means. So if you didn't understand what that episode's about, that's what I'm talking about. Where you need to not just be successful and have a good, right? You got to have some money if you're going to play in the game. So they're like, okay, well, welcome to Axelrod Fund. The minimum is, for the employee pool is $250,000. No, well, I'm not spoiling it. I'm just saying there's an episode where this comes into play. And I think a lot of people don't know these things. Like, they don't get what's going on. Like, right? This is what's going on. Being able to put your money in. Okay? So from the get-go, though, there will be the flagship fund. If you're going to work with me or work for me, it's like, well, you have to contribute, right? You have to contribute. So, over the last 5 years, right, I gave you, right, we started with 25 grand, right? I gave you 20 grand, we put in 5. So it's been 5 years. How much money you got? Right? And in year 1, I wish I can draw. I guess you can't do it, right? This is going to be too slow. I can't draw, but imagine at the end of year 1, if you're doing 5% a month, at the end of year 1, you have $50,000. At the end of year 2, at 5% a month, you have $100,000. At the end of year 3, at 5% a month, you have $200,000. At the end of year 4, at 5% a month, you have $400,000. At the end of 5 years, you'll have $800,000. You should keep $300,000 for yourself as a reward, so you can go out, buy your yellow Lamborghini and get that out of your blood, right? And then the other $500,000 goes into the fund, and you're a trader. But the thing is, most people don't have that kind of tenacity. They can't think that far. They couldn't possibly handle that kind of money, and that's why you won't qualify. You see? Like, you just won't be able to do it. I know. But 5 or 6 or 7 or 8 or 9 or 10 people will be able to do it. Now we got ourselves. Boom. Yeah. But, of course, most people can't do it. It's fine. It's only 5% a month. Like, it's possible. Maybe at the end of maybe it takes you 8 years instead of 5 years. It's all right. Right. That's what men in action say. We're not most. And I know that. But most are not. Yeah. That's it. So it's kind of cool. No. Not MAM accounts. Come on. So anyways, just think of that process. Do you have a 5-year plan? Do you have a 10-year plan? Okay, you have to know why you're doing it, where you're going. Otherwise, you're just going to make a lot of mistakes. Oh, that's funny. I thought, I don't want to run over, and I looked. It was 1 minute over. So anyways, yeah. So anyways, my name is Wayne McDonell. I'm with Traders Way. I'm also with FX Bootcamp. If you need a trading account, visit tradersway.com, open up a demo account, and please just give them the opportunity to earn your loyalty and respect. That's it. That's the sales pitch. If you need to learn how to trade properly, using price action, using pivot points, using fundamentals, you need to visit fxbootcamp.com. In less than 4 hours, you will be managing the balance sheet of a commercial bank. Because if you can't do that, how the heck am I supposed to teach you how to run a central bank? So, if you like that type of information, how to day trade, how to intraday trade, how to swing, how to position, how to carry trade, fxbootcamp.com is a place to start. Cool. And I think that's it. My chart templates and stuff are at metatraders.com. This has been the 176th month that I've done this webinar with FX Street. So I'd like to thank FX Street and Adindo, our moderator, for all the wonderful work that they put into this and all the support they've provided us and me for the last 20 years or so. Pretty cool stuff, right? Yeah, thank you very much. Hope you have a nice week. I got to go hang out with the banker. At first, he's going to tell me how awesome I am, and then he's going to give me 19 reasons why the money's going to be slow. Yeah, oh, we love you, but, underwriting's so difficult right now. Yeah, don't get interviewed by Barron's Magazine, right? Actually, that would be the cool. Off the charts, I haven't been doing it because it's been rainy and cold in Georgia. Yeah, I have the hoodie. Yeah, I'm just wimpy. I left Canada for a reason. -30 was a big part of it. Yeah. So I've been up since 4 o'clock in the morning. I'm going to take a 10-minute nap and then move on to the next hustle. There's always a hustle, right? When you're an entrepreneur, it never stops. So you better love what you do, and if you do it, you don't suck. If you're going to do something, if you're going to get out of bed, you should rock it. You should be, better than the best. Best believe you're the baddest. I'm pretty sure that was Confucius. Didn't Confucius say, I'm better than the best believe I'm the baddest? I'm pretty sure that was Confucius. So, let's start. Let's do this over here. Let me move this over. Cool. Peace on earth. May the pips be with you. May your profits be above average. Again, if you join Traders Way, maybe you'll attend my webinar on Monday. Go to FX Bootcamp if you need training and all that. We also have a live group there, but you don't get invited to the live group until you've logged into the videos. So, whatever. FXBootcamp.com. Peace on earth. May the pips be with you. May your profits above average. And thank you very much again to FX Street for being wonderful hosts for the 17 years that I've worked with them.